Hello everyone and welcome back to my channel. Today I will be explaining NES long setup that happened on the 14th of July. Today will be a little bit different because on that day were some red news folder news in which, in my opinion, and I would avoid taking trades on those days. What I mean by that is that I don't take any trades prior the news. I love to wait after the news to see how the volatility was in the market and then take any trade that the market offers me. Just to be clear, I didn't take this trade, but I shall be explaining the thought process after it because I was still watching the charts and our strategy criteria ticked all the boxes for a long entry. If maybe you have like an evaluation account, it was good to trade with, because definitely you would have passed it with a single trade, because the error that was given in this trade was above the 10 error, so it was pretty good. So let's start. First of all, like usual, I decide the bias for the day, and the bias for the day was long. Of course it was bullish, so I will be going only for longs. Why? Because as you can see here on the chart, we on the 4-hour time frame, it is still bullish. As you can see here from the line that I have marked right now, the 4-hour time frame price made a break of structure, so I will be going only for longs. Price has then taken the liquidity from here and made a bullish movement like this that I'm marking. Grabbed the liquidity from here and then made another break of structure, an inner break of structure, as I like to call it. So while we are still on the 4-hour time frame, I will mark the key liquidity point that is most catchy to my eye, which of course is this point here, the 4-hour pin bar here. I will label it 4-hour, and I will mark also this point here. So price didn't go below the second point that I have marked, but it was still a good point to mark. So for now, that's all on the 4-hour. Our job is done. I shall drop to the 1-hour time frame and see how price is there. So we are on the 1-hour time frame, and as you can see, this is the point that we have marked on the 4-hour. There are no points to mark on the 4-hour for now, because as you can see here, the only point that was good was this 4-hour here, so it's also good. It's more clean on the 1-hour, on which I shall mark 1-hour, but we will not be using that. So the only thing we have to do now is to just wait for price to go below that liquidity and see how it folds. So now I will be dropping to the 1-minute time frame and I shall explain. So this time here, it is 10 in the evening. Price went below the liquidity of the 4-hour that I have marked. Of course, at the time I will not be taking any trades, definitely, because I will be sleeping. But as you can see, price retraced, and during the Asian session it made a new inner low, which, as you can see, a consolidation can be seen here. So in the morning, when the London session started, 9 AM, we had this bullish movement here. We had this bullish movement here. So that bullish movement ticks one of our boxes. Why? Because the beginning of our strategy first is to have that big bullish movement, and as you can see, this bullish movement can be seen very easily. Also, for me here, it's a linear break of structure, which is showing me that price wants to go higher. So what do? We plot the fib from the bottom of the bullish movement up till the highest point of the bullish movement, and then again we just have to wait. Now we will wait for price to go below the 61.8 of the fib, and also to go below any liquidity in that bullish movement that was created earlier. So I will mark the liquidity from the bullish movement. One is here, one is here, and also if you zoom in a little bit, you will see this red candle there, which when you see it like that, you will not give it a lot of importance, because it's in the middle of the bullish movement, so you will not give it that a lot of attention. These points here are more eye-catchy, but I still mark the low of that red candle, I will still mark it, because you can never know what happens when price goes below that point. So I will remove the fib as I don't need it anymore. And at around 1 p.m. price went below that point that I have said that you wouldn't have noticed. So we plotted it, we leave it there and see how price folds. Now, when price went below that point, there were two entries that one could have taken. So one of them was the aggressive entry, which was this one here. When price went below that point, an IFVG was left open, and then it was filled. And that minute that the IFVG was filled, the entry long could have been taken. I will mark it IFVG, and the long setup could have been executed right here. So we'll leave it like this for now. So that is the first setup, the aggressive one. But the second setup, which in my opinion was more safe. Why? Because again, I will say price took the liquidity, made a bullish move, and then it retraced and went below the lowest red candle from that bullish movement, and we have it right here. And so when price went below that candle and made this bullish candle, the entry execution was good to be taken. The stop loss would have been set at this bullish movement candle low. So literally this entry strategy ticked all the boxes for us to take the long setup, but as I said earlier, due that were high volatile news, red news folder, I stayed away and I didn't trade at all that day. So if any of you would have caught this trade to pass like an evaluation or something, it would have been really good. As you can see, I will show you the RR of both trades. One went at 12.4 R and the other went 16.5 R. But in my opinion, when there is the red folder news, I don't trade before them. I wait for them to pass, and then I see what the market offers, and if there's a setup, I'll take it. So for today's video, that's all. Just a quick recap before I finish. First, we start by deciding the bias for the day using the 4-hour time frame or the daily. Then we mark key liquidity points on the 4-hour and on the 1-hour. And then after marking those key liquidity points, we just have to wait on the 1-minute time frame for price to go below those liquidity points. So after price goes below those liquidity points, the only thing we want to see is that bullish movement. We wait for the bullish movement to be created. We wait for the movement to start retracing and going below the 61.8 of the fib, and also any liquidity points from that bullish movement. Once price goes below those points, the entry executions can be taken. Of course, it needs to still match with our entry criteria. But like the setups here that I showed you, all of them matched. So for today's video, that's all. I hope that you like and enjoy it. And if so, please like and subscribe. Thank you, and I'll see you on the next one.